Hello, and welcome to our channel, Pursuit of Wealth. This channel is your ultimate destination for learning about finance and wealth, investing and crypto, informational and educational trends in finance management. If you are someone who wishes to become wealthy and looking for smart money management options, then we are fortunate to have found each other. In today's video, we will be discussing some of the most effective strategies to double your money. Saving money and watching it increase is one of the key reasons we invest. However, with traditional fixed deposit interest rates so low, it makes sense to explore for alternatives to double your money. The fact is that to see your money grow, you must take measured risks. We're here to talk about how to double your money. Let's get started. Doubling your money is as realistic as the Earth revolves around the sun. But to let that happen, you need to keep the following things in mind. 1. Get-rich-quick schemes that promise guaranteed sky-high outcomes with minimum risk should be avoided at all costs since they don't exist. Because there are likely far more investing scams than there are sure bets, be wary of anyone promising you returns that seem too good to be true. Whether it's your broker, your brother-in-law, or a late-night infomercial, check to be sure no one is attempting to double their money via you. 2. Be completely honest with yourself and your investment advisor, if you have one, about your risk tolerance. Discovering you don't have the stomach for volatility when the market is down 20% is the worst possible moment to learn this, and it might be disastrous for your financial future. 3. Don't let the two emotions that most investors are motivated by, greed and fear, affect your investing selections. Number 1. Buy growth stocks. Growth stocks are a terrific method to possibly triple, quadruple, or even more than double your money. Growth stocks, on the other hand, can be more volatile and riskier, and they frequently trade at exorbitant prices. So, approach them with caution, aiming to acquire the ones that appear to be inexpensive yet have a lot of promise. If you follow the Motley Fool's investing strategy, you'll purchase at least 25 stocks and hold them for at least 5 years. This should offer you a good chance of having one or more standout performers, with your winners greatly outnumbering your losers. Number 2. The traditional approach, slowly earning it. The iconic Smith-Barney commercial from the 1980s, in which British actor John Houseman assures viewers in his recognizable accent that they make money the old-fashioned way, they earn it, will be remembered by investors who have been around for a while. That advertising isn't too far off the mark when it comes to the most convenient method of doubling your money. Investing in a good, balanced portfolio that is diversified between blue-chip companies and investment-grade bonds is a tried-and-true strategy to double your money in a reasonable length of time. From 1928 through 2021, the S&P 500 index, the most widely watched index of blue-chip stocks, has gained roughly 9.8% per year, including dividends, while investment-grade corporate bonds have returned 7.0% annually. During this time, a traditional 60-40 portfolio, 60% stocks, 40% bonds, would have returned roughly 8.7% yearly. According to the rule of 72, a portfolio like this should double in 8.3 years and quadruple in 16.5 years. However, such sterling outcomes are usually accompanied by a large level of volatility. Investors should expect severe drops from time to time, such as the 35% drop in the S&P 500 index in 6 weeks in the first quarter of 2020, when the coronavirus pandemic exploded globally. Furthermore, extremely large returns compared to the historical average may limit future gains. For example, by year-end 2020, the S&P index had recovered from its 2020 slump in record speed and was on its way to new all-time highs. Although it delivered a staggering total return of 100% from 2019 to 2021, the S&P 500 index's future returns may be much lower due to its spectacular performance. Number 3. Buy value stocks. Another approach to double your money in stocks is through value stocks, which is less risky than growth investing since value investors look for a safety margin before investing their hard-earned money in any stock. Don't think that being a value investor means you'll only be able to invest in slower-growing firms. Growth stocks, however, may be inexpensive at times, allowing investors to have the best of both worlds. For instance, Meta Platforms, previously Facebook, recently traded at a price-to-earnings or P/E ratio of 23.6, much below its 5-year average of 30.9, and a price-to-sales ratio of 8.5, also well below its 5-year average of 10.7. It's a corporation whose third-quarter sales were up 35% year-over-year and whose profits per share were up 19%. It's both a growth and a value stock. These are just a few of the many options for doubling your money. However, they aren't the only ones. You may, for example, effectively invest in real estate or work a couple of side gigs to increase the amount of money you have to invest. Regardless of how you go about it, your goal should be to dramatically expand your assets in the coming years. Number 4. The radical approach of doubling your money. Even the most conservative investor understands that there comes a moment when you must purchase, not because everyone else is doing so, but because everyone else is selling. Stock prices of otherwise strong firms periodically go through slumps, which intensify as fickle investors bail out, much as great athletes go through slumps when many spectators turn their backs. Smart investors purchase when there is blood in the streets, even if the blood is their own, as Baron Rothschild is believed to have declared. Nobody is advising you to invest in rubbish stocks. The idea is that strong assets can get oversold at times, which creates a purchasing opportunity for investors who have done their due diligence. The price-to-earnings ratio and book value are two valuation indicators used to determine if a stock is oversold. For both the broad markets and individual industries, both measurements have well-established historical standards. Smart investors stand a chance to double their money when firms fall substantially below these historical norms for superficial or structural causes. Contrarianism is defined as going against the current trend. As a result, it necessitates a higher level of risk tolerance as well as extensive due diligence and study. As a result, a contrarian approach is best left to experienced investors and should not be attempted by a cautious or novice investor. It's typically a good idea to join in a 401k plan if your workplace provides one. Even better, because many firms match 401k contributions, if you invest enough to get the maximum match, you'll be getting as much free money as possible from your employer. Matches frequently, if not always, double your contribution. Some organizations, for example, may match your contributions dollar for dollar up to the first 3% or more of your income that you provide. This is a great example of how to double your money. It's a 100% money-back promise. Other company matching formulae exist as well, such as matching 50% of your donations up to 6% of your income. Number 6. The rapid way to double up your money. While some investors prefer to take it slow and steady, others find themselves falling asleep at the wheel. Aggressive tactics include options, margin trading, penny stocks, and, more recently, cryptocurrencies. May be the quickest way to supersize the nest egg for those with high risk tolerance and some investing cash that they can afford to lose. Everyone can rapidly deplete a savings account. Shares options, such as put and call options, can be used to speculate on the stock of any firm. Options can boost the success of a portfolio for many investors, especially those who have their finger on the pulse of a given sector. Each stock option might be worth up to 100 shares of stock. That implies a company's stock price may only need to rise by a modest percentage for an investor to strike a home run. Just be cautious and do your study before attempting anything. Buying on margin or selling a stock short are two possibilities for individuals who don't want to study the ins and outs of options but want to leverage their faith or misgivings in a particular stock. Both of these approaches allow investors to borrow money from a brokerage company to purchase or sell more shares than they own, significantly increasing their potential earnings. This is not a tactic for the faint-hearted. Finally, scavenging for extreme bargains may transform pennies into cash. You may take a chance on one of the many former blue-chip firms that have plummeted to under $1. You might even invest in a firm that appears to be the next great thing. On a single trading day, penny stocks may quadruple your money. Just keep in mind that these equities' low pricing represents the majority of investors' attitudes. Other cryptocurrencies have developed in recent years as one of the preferred ways for speculators to make a quick buck, as Bitcoin has increased in popularity and become more mainstream. Number 7. Dividends. Another smart approach to double your money is to invest in dividend-paying stocks. They're equities just like any other, with prices rising over time as long as the businesses are healthy and expanding. But in addition to the regular stock price gains, there are dividend payments, which tend to increase with time. That's a devastating 1-2 blow. Hats for Cats Inc. is a company that makes hats for cats. Dividends of $2 per year will be paid out, with the payout growing by 10% each year. In only 7 years, the dividend will have nearly doubled to $3.90, meaning you'll be getting nearly twice as much cash every year from your shares. Your income would increase over time, as would the stock price, as long as the firm performed well. Number 8. The single most effective way of money doubling. Your risk tolerance, investing time horizon, and personal preferences all play a role. Most people benefit from a balanced strategy that includes investing in a diverse mix of equities and bonds. Those with a larger risk appetite, on the other hand, may want to invest in more speculative assets, such as small-cap companies or cryptocurrencies, while others may seek to double their money through real estate. The undisputed heavyweight champ is an employer's matching contribution in a 401k or another employer-sponsored retirement plan, even though it's not quite as entertaining as watching your favorite stock on the nightly news. It's not glamorous and it won't wow your friends, but collecting 50 cents for every dollar you save is hard to top. Even better, the money you put into your plan comes directly from the money your company reports to the IRS. For the majority of Americans, this means that each dollar invested is only worth 65 to 75 cents. You can invest in a standard IRA or a Roth IRA if you don't have access to a 401k plan. Although you won't receive a corporate match, the tax advantage alone is significant. The immediate tax advantage of a standard IRA is the same as that of a 401k. The principal and profits of a Roth IRA are taxed in the year they are invested, but they are not taxed when they are taken at retirement. There are various options for doubling your money. Before making a decision, think about your budget. So, ladies and gentlemen, that's it from today's video. These are some of the most effective ways to double your money. I hope they'll be helpful for you. If so, please like the video, comment on your feedback and suggestions, and share with your friends whom you want to be successful just like yourself. Please subscribe to the channel and press the bell icon for more amazing content about wealth management and finance-related videos. Success is coming your way. Keep your doors open. See ya till the next time. Stay tuned for more informative videos.